Ma'am?
All right, welcome back. We'll start this thing out. I guess you may want to look at negativo dia. Oh, is this pre-market or US? I'm sorry. Positive dia, slightly. Nasdaq was the best, almost 1%. VIX slightly better. It's getting lower. It's under 15, so that's something to write home about. And then for tomorrow's market, things are looking negative. Tomorrow is Wednesday, so this is how it looks so far. All looks down, by the way. So now, oops, that's wrong. Going back to stocks. We're looking at the positivos for the dia. Snow. We don't trade this, so it doesn't matter. Uber. Someone was shorting Uber at the end of the day. And I guess we had earnings. And we can see we had greater revenue and basically a lot less profit. They're still profitable, but they're very much underperforming. And Alisa, because of that, I think you should put this on the notice for a short tomorrow. We probably should try to get in tonight, put our order in 49.89. And yeah. And let's see. So I don't know when earnings came out, if it was before or after. I guess it was before. And I guess it went down because of that and went back up. But that's just like a Peloton play. That they go up the day terrible news comes and then go down the next days. So I would have thought this would have continued to tank. I would have shorted it and it would have went up the yin yang. Now it would be recommended that I would short it. Let's put it that way. But we'll put this on the nose then. 49.89 is the price. Open. It went up today 3.5%. And it doesn't really mean anything. To me, this looks very stupid. This trend, because we know it's going down. I still do say short any pops on this thing because we have this going down basically to match this 130 or whatever this is. So, hey, short the pops. It's trending down. Lyft did the same thing as Uber. I'm assuming, yes, it has. Oh, it's coming out tomorrow. So this will probably do the same thing. If you want to play this instead of Uber, that's fine. But I would probably just play Uber. Or I guess you could play this for the sympathy play. Plus, it's coming out, but then you gotta hope earnings is just as bad. So, coin, yes, I was able to get out. I'll take a round of applause for that. Didn't quite hit 90, but we got to 89.5, and I got out at 89. I got in it again And then, I don't know, did I get out? I still got it. I think I got it. I ended up getting out. But I did get out like right around 89 and a few things. It's just being covered or whatever. So I was very happy because of that. This is on hard to buy now, so be careful with it. We did see when it got up to over 100, 110 basically, and then crashed down. So just be careful, people. But I was just so happy yesterday. I got out of 200 of the 500 shares, and today I got out of the rest, the other 300.
Yes, especially since it's on hard buy.
Yes. EBC was up today, 28 cents or 2.5%. This was a good day to go long. I would like to be more involved in this, but the volume, you got to catch it on a good day. The volume was fairly high today, but sometimes they can have under like 100,000 for volume, and that's just ridiculous. So it does look like it's trending up at the end of the day today. I can't tell you. This thing usually goes with the market. I don't know what this looks like. It would look like it's coming down, but we still say the 10 is the buy zone, that 10 area that we have highlighted down here. So everything else is just a guess. Amazon was obviously up today. We're getting to this point again almost. Let's see. What do we have for historical reference? We have a long ways to go. We have definitely slid somewhat. Historically, you would think we would be getting ready to do a downturn, just based on what we previously saw. But I don't know here. Who knows? I would think we could at least get to Christmas before we have the real downturn. That's just me thinking out loud. But today we were 2.3% up. Intel had a good day. Put this on the notice. They had some news about they're doing like a government deal, and I do like Intel for the long run. It is trending up. I would like to get it. Yes, trying to get it in that $25 range is going to be ridiculous. I know that, but I would like to get it on a dip, if possible, or even buy in a little bit, or put a note for us to look at tomorrow. Maybe we can look at some options on this, Elisa. To look at long term, like 2+ year options on this, 2 to 3 year options. Airbnb, no. Nikete is up over 2% today. Strong day today. It's in this area, this area of consolidation. Last time it went down, you would assume if it can consolidate again, it could be heading up. And this 50-day, it seems like it could show that. So this could be a possibility to consolidate and head up. Yeah, we went up today. Solid movement from the very beginning. $2. That's a strong day. And Mensana, not as strong, didn't get to 2%, but it did go up all day. So I can't like complain too much about it. Yeah, $3, but you know, yeah, it did. It had a solid day, just not as strong as everything else. This had been days where it hit peaks and was going down. Now we would surmise that the same area would become support. So it could consolidate here and then come up, even though it looks like we're getting maybe lower lows, which doesn't look good. It is consolidating here, but this scares me a little bit. So I'd be a little careful. The trend is showing it could be turning down. Normally, if it's consolidating here, I would think it would be going up. But because we're getting lower lows, I'd be a little bit careful that, something. I don't know why this week it had pretty good numbers. I think it's outlook, and I think people are thinking about a recession. But I just be a little careful just in case something starts to happen. Don't put all your marbles in one jar, let's say. AMD, couldn't look at this for a long time. Now I'm okay with it. I just look at this as a day trade. When this movement, trade it. When it's not, don't. Sean was trading this today, right?
I believe so.
Yeah, it did good for earnings. I don't know. I just don't trust this. This has been kind of wishy-washy. It should be starting to come up now. So maybe this is it. Um, and if Intel's leading the pack and is strong, it could be strong. So maybe we're out of the fuego now, and it's starting to come up. If so, hey, good for AMD. Tesla, up 1.25. Even though this looks nice, 216 to 222. That's $6. That's if you could have gotten that and even gotten up here, that's not bad. 216 to even this area, almost $2. So it's there was some money to be made with Tesla today. Um, you can't really knock it. Tesla gives and it takes, but it it definitely gives. It doesn't just take. Still in this, we have been suffering in Disney for a while now, and all because of buying at the inappropriate time. Earnings. Okay, notice earnings tomorrow, and maybe in your free time, you can find out if it's before or after uh, the market opens. But this is good. This is something that this could potentially propel us upward, and I'm interested in getting some information on. It
It's
seems
in the aftermarket.
okay. That's not a good sign. Yeah. It seems like we have been coming up, but I don't know. It's just not a good sign. But I'd like to see at least get to 90. But I'm looking forward to earnings tomorrow. Um, Dollar General, don't really care about this. I don't think people should be trading now. It's going through its issues, At least the new CEO's taking over. Dollar Tree up a little bit over 1%. Yeah, why not get it? Ooh, okay. Seemed pretty good to me. Yeah, seemed like a good day to me. A legitimate $2 that they counted from when it closed there. So still, it's a legitimate $2 to me. I like this as we go into the holidays. I think it's a nice buy for the holidays. Lit it right up. It's come out of this area here. It didn't quite hit $100, so that's telling me it's somewhat stronger than we thought. So why not take a stab at it? You know, you at the very least you're gonna fill the gap. Go to 140. You know, what is that? $25. What do you have to lose? You know, put this on the play. Yeah, at least write it up through the holidays. Put this on the play around 115 purchase price.
Got it.
We have been talking about this before, but Dollar Tree, it's not anything you should just sneeze at, you know? Yeah, that's like, $25 at the end after Christmas. That could pay off some bills. Softy was positive. It's been going up very strong, very forte, as they say. We talked about shorting this soon. It's already this maybe is are we saying 52 week or all time? I don't know if this is there yet. Okay, so maybe we're not at all time. But it's definitely gonna be close to it. Yeah, because this is about we got about another $6 to go. But we're getting there and yeah, it's probably gonna run up through Christmas and then it'll be at all time and then we can probably short. But Microsoft is a short wash after the holidays. Meta is getting cray cray. Wasn't a good day today, and it's just doing the damn thing. And I'm not gonna talk about shorting anymore because obviously it's very strong. And yeah, I'll wait till it's 150 or potentially at the all-time high area before I talk about shorting it. American up 60% of 1%, or 0.6%. And I don't know what to say. If this is the turning point, I don't know. This is all over the place. I don't know what this means. Who the hell knows? Don't ask me. All I know is I'm in it by a lot, and maybe when I get out of some pokeria, I will consider buying in. But this to me has been very weak, so it's just you're just waiting for it to move. Walmart was also positive, not that great. Even though this is a red candle, it's kind of like a fake red to me. It did come up and then went back towards the end of the day, but overall, it closed higher. than it did yesterday. So it is positivo. So if you like this, I guess you can say, hey, I'm going to keep going with this until at least after the holidays. And then after the holidays, let it go down. This is another one with Walmart, at least. That I think after holidays, this could slam down. But for now, it's going to be strong through the end of the year. And then come the new year, it'll probably self-correct. Let's see. 0.4% increase. Not too much to write home about here, but it was an increase. You could have got these lows here, and basically came up to 131. You know, so a little bit over $1. Coca-Cola, Target. Oh, Target was positive today. Okay. Okay. Whatever. It's only up from here. So I know Roku, it had earnings and did really good. This was one I had wanted to short, and it seemed like I would have been right. But I would have wanted to short it yesterday, but of course we didn't meet because of issues. But even today, you could have got in. Yeah, you could have got in and got. It has some swings, but you still could have had a nice short today. So, this is still, at least I think, up for grabs. 83.43. Potential short, watch for short. After it's come up like this, it still could be moving down. Look, when we had this big uptick, and then for several days it went down. So, put this on the notice for watch for potential short. 83.43, maybe a good play. It says it went up 13 cents, but you really had some areas where you could have reverse, long, short, and made some money. Home Depot, who cares? At its price, I'm not buying it. Seems like Tractor Supply went up a little bit, but it's still under $200. UPS sticks, I'm not messing with it. Too much drama going on there. Banco, I don't know if it's gonna stay around this $28 area, but if I was gonna get something, I look at EBC. Campbell's, we're still at the 40 plus range. So you still can buy. It has come down, which I like. But because we were getting it cheaper and below 40, I still want to get it less. But eventually this thing is gonna shoot up. And when we start to get really, really cold and flu season, COVID season is starting to come in. And when it gets cold, trust me, this soup stock is going to shoot up. And you're gonna be like, oh, it's $44. Now I don't want to buy it. But it has a long way to go. It has to fill this gap, and it will get all the way back up to 50, then back up to 55. So yeah, you have to hold on it. But because you're buying it down here, you just hold and wait for the spring. BA, Boeing, still under 200. That's good. The airlines are doing bad, so I'm not buying into this. Macy's, it seems like it may be coming back down. I thought it was going to hit 13, it did looks like, and then started to come back down. So if people are interested, they can always get in. AM, we're not going to talk about that. To me, that's a waste of time. This was one I wanted to look at and I didn't get a chance to. It did go down like crazy. It dropped down, but the major drop was dun 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 right here in the post and pre-market. So if you had it here when the news came out, I don't know if this is going to continue or not. It did have a wick down here, so maybe it could. May want to watch it tomorrow. But it did come down. As always, news came out right before open, and then it goes up the yin yang. So I got out of this taka because of that. Because you know how P10 does, it always goes up at news. And so I was trying to find a shorting point, but then when I saw what was going up, I got out. And then I was looking for one and I missed it. And then all of a sudden it came down. I was thinking maybe around like after 1, it would hit it and then come down, but it did it a little bit earlier. So, hey, you missed it, but my friend got it. So, you know, that was good. We'll just look at this real quick. Anything on here? Foot Locker, High Fiber. This thing keeps going down like nuts. Eesh. Man, it has a good day, but this thing has been going down. DraftKings, I have high hopes for this. This is my version of Intel. Yes, it will be struggle, but in the end, this will be like number 1. It has a good platform. Oh yes, we should look at this. So Revia, someone I think should be doing. Did you want it to come up or down?
Down.
Okay, so then never mind. We're gonna see where this is gonna go. So it did good. So obviously, get out. And then we'll see. In the morning, this could be down to trick people, and then it could go up. So maybe in the morning it'll be down, maybe here, and then you can get out, or maybe it'll come down here where it closed at. So this is something they have been talking about this, and I'm sure it'll be being traded tomorrow. So put Rivian as a possible play based on our earnings play. Don't care. Beyond Meat. We don't really trade this anymore. So I don't know. It's $7. It's done basically. Let's just say. 5
Did it have earnings?
What? What?
Meaty.
I heard you. Tomorrow. So in anticipation of earnings, it's been what? That's been somewhat going on. But overall, it has been going down. So who knows? I don't think it really matters, but yeah. So that's that. So we have the Minutos, and I'm going to do I want to listen to this? OPEC and oil, or I want something long, and we'll listen to the urban doom. And it's threatening American cities like New York and San Francisco. Explain. And we'll listen. Oh, we have 16 seconds. I don't want to play the Peloton commercial because we're hoping P time goes down. So, and they're hoping you don't pay attention to how P time is. The stock market is going terribly. So you know what? I need to stop sharing, and then I need to share again, and I need to share my sound and optimize for video, and then do that.
From sky-high interest rates.
America's big cities are facing major problems.
From sky-high interest rates to the reluctance of employees to return to their office.
The impact of higher rates and the banking stress is hurting smaller businesses across the country.
Many of which can be summed up by a controversial new phrase, the urban doom loop.
The environment is certainly shifting on Main Street, and it's weighing on optimism.
Losses at the bank level, right? There's going to be losses at the investors level, and I think for the cities, right, they're going to have this potential, this urban doom loop.
Columbia Business School professor Stan Van Nieuwerburg coined the term. Here's how it all works.
Early in the pandemic, a lot of office sector workers started working from home. And here we are 3 years later, many of them are still working from home at least some of the time. All of that has led to a large reduction in the demand for office. We see a lot of companies downsizing. We see a lot of companies not renewing their leases at all and consolidating. And with this demand decline for office comes declines in the revenues for the owners of those offices and value declines in these offices. Declines in property values reduce property tax revenues for the city. Because cities have to balance their budget, they now need to cut spending. That means less money for public safety, for sanitation, for transportation, for education. Makes the city a less attractive place to live. People migrate out, property values fall more, less money, more people moving out, and the city gets into an urban doom loop where its fiscal health spirals down.
At the height of the COVID-19 pandemic, remote work policies prompted many employees to leave their city and move to new states. These population outflows have long-term implications for cities, which rely on tax revenues for funding.
Property tax revenue in New York City is about half of all tax revenue. Commercial property tax revenue is about 10% of all tax revenue. So if the value of that falls by 40%, we're talking about a 4% hole in the budget. So if New York City's budget is $100 billion per year, that's a $4 billion shortfall that has to be made up somewhere else. Rich people pay a disproportionate share of income taxes. In New York, for example, a few thousand taxpayers are paying half of all taxes. Migration has become easier because you can leave the city without leaving your job. So if a few rich people or families leave, that could leave a large hole in the budget. The technology sector has been more permissive to remote work, and so those cities tend to be affected the most. Think of places like San Francisco, Seattle, West Coast cities sort of more generally.
The urban doom loop isn't just a theory. It's playing out in the real world, with landlords finding themselves financially underwater and regional banks facing a credit crunch.
So when I'm a landlord and I want to buy a building, typically I'm going to buy it with a combination of my own money, my equity, and a piece of debt. Because real estate is such good collateral, banks are generally willing to lend a lot of money. So typically there will be 60, 65, sometimes even 75% debt and 25% equity, right? So that would be a typical financing structure for a commercial real estate building. And then typically the debt will be fixed rate. The only difference is I'm not paying off any principal, which means that 10 years later when my loan comes due, I need to refinance that loan. Now normally that's not a problem because normally the value of my office will have gone up in these past 10 years. But what if it hasn't? What if the value of my office has in fact gone down? So now the bank will look at that office all over again and reassess it. And to the extent it's even willing to give me a new loan, it's going to only want to give me a smaller loan. So now as a landlord, I'm going to have to make a tough choice. Either I come out of pocket and put more money into the deal because the loan that I'm getting now is smaller than the one I need to repay from 10 years ago. So I put in more equity in the deal, or I walk away And I have the right to do that. I can send the keys to the lender and just walk. A lot of the debt is non-recourse, which means the bank has no recourse to my other assets. I can just simply take this one office building that I've borrowed against and just send the keys to the bank, and the bank now owns the building. So banks are facing this deterioration in basically the credit quality of these commercial mortgages that they have on their books. So these smaller regional banks that have done a lot of local commercial real estate lending, they're now tightening the screws on the credit for the local non-real estate firms as well. That is sort of a traditional credit crunch. Commercial real estate is a very large asset class. There's about $5 trillion of commercial real estate out there. And whether you know it or not, your pension fund might very well have an exposure to commercial real estate directly or indirectly. There's also a part of the equity market called the REIT market, which is the publicly listed real estate space. And again, a lot of folks have exposure to that through a mutual fund, through an exchange traded fund. And those REITs, especially the office REITs, have fallen on hard times in the last several years. Their stocks are often down 50, 60, 70% sometimes.
Occupancy of office getting to 30% below pre-pandemic levels.
The office sector certainly is going to experience more pain than any other sector in the next 2 to 4 years.
With only a small percent of desks occupied around the world 5 days a week and trillions of dollars of commercial and office debt about to come due in the next couple of years, it really makes you wonder how it's all going to shake out.
So are we really doomed? Or is there a way for cities to pull themselves out of the loop?
The fundamental problem is that we have too much office. The only solution in the long run is to get rid of some of the excess office we have and repurpose some of that space. The solution you hear about the most is apartments. Turns out that that's easier said than done because a lot of our large offices are very big buildings. By my own calculations, only about 10% of office buildings are physically suitable for conversion to apartments. But that's just one of the options. You could think about more medical office space. You could think about more entertainment spaces, more hotel space. There's a lot of creative things we could do with the land. This is nothing new. Cities have always reinvented themselves throughout the ages. And it's now basically our next challenge is to get rid of some of that defunct office space.
So, we got about 2 minutes, 20 seconds. This is what they say could affect real estate, the commercial real estate sector. Could bring a lot of things down, and I wanted to show this video because it is an issue, and yes, people could make these buildings into homeless shelters, tiendas, whatever you want to call them, but we know that realistically that ain't gonna happen. So any thoughts, Ms. Munoz?
Yeah, I think, like he said, it's gonna be harder than what people think it is to like just renew it and make it to like something else. Especially like there's so many buildings that were purposely done for offices. I think it's gonna I think it's gonna get worse before it gets any better.
Commercial
Because
real estate's gonna get cheaper. I was telling a friend of mine the other day that, hey, buy a commercial property that looks and is set up like residential, but it's commercial, or it's set up as mixed use. Because I said something that could have cost $200K before, it may be you could get it for $100K if you just have your savings and money in place. And if you can pay that out of pocket, save up instead of getting a loan, then you don't have to pay the crazy interest rate. Last word before we get out of here, Munoz.
I have sent you a lot of notas.
Gracias. And thanks for coming back. And we got this thing going again. And same channel, same station, mañana.
Same bad channel, same bad station. That's right.
All right, peace out.
Peace out, my friend. Good job.